Hello everyone and welcome back to the channel. Guys, in this video, I'm going to explain to all of you how you're going to manage your 1-1-2 option strategy, okay? But first thing first, for those of you that haven't watched pretty much the part number 1, which was this video here, okay? Go and watch this one first, because this video I'll explain details how you're going to enter the trade. And once you know how to place your 1-1-1, 1-1-2 and so on, you can come back and watch this video, because I also mentioned a little bit quick how you're going to do your TP and your SL during this presentation here, okay? But nevertheless, in this video, we are going to explain to all of you how you're going to manage your 1-1-2 trade. And for those of you that doesn't have a clue what I'm talking about, again, watch that video. And by the way, guys, back here, okay, for those of you that are beginners when it comes to trading option, here we go. From 0 to here, you can learn how to trade the option, guys. And I put plenty of videos here to add up to this playlist here, which is everything you need to know and you must know as an option trader beginner, okay? This is the best thing you're gonna find online when it comes to learn how to trade option. Anyway, nevertheless, back here to our presentation, what we're gonna do is we are going to pretty much manage our 1-1-2 strategy. Very, very simple. What is a 1-1-2? Very quick. It's very simple. We are buying one debit spread and we are selling one. Okay, this is very crucial to understand. I'm gonna put here naked put, but myself, I don't know what everybody else teach you on YouTube. This for me, it's not a naked put. This is my cash secure put option. Why? Because we are doing this thing here on things that we are willing to hold long term. What are these things? Index, ETFs, and futures, okay? Why do I say we want to hold this thing for the long term and this is a cash secure put and not a naked put? It's simple. Let's say, for example, that we had, okay, the ES trading at 30% pullback. You got a sign on your naked put. Great. Guys, if you're not willing to hold this thing here at 30%, basically you're holding the market at 30%, I don't know what else you're going to buy long term. I'm really sorry. That's why we trade this thing here on these 3 types of products. We don't want to trade this thing here on meme stocks, things like that, because those things will never recover to the with the market. But guess what? The index, ETFs, and futures, guys, it must recover. But what if we go in a bear market for 2-3 years? Stiff shit. Simple, okay? But if we get a sign here at 30%, and from here, what you can do is, like I explained to you guys on that video, go and watch, we are going to transform this here to a covered strangle. We're going to transform these, let's say, 200 shares, whatever product might be. We're going to transfer this to a covered call. We are going to transform these or convert it to a wheel strategy, or we're gonna pretty much hold long term. As you guys can see, we have plenty of ammunition to deal with the massive drop. Okay, why? Because whatever the Mr. Market throw on us, we know exactly how to deal with. And the main reason you're going to lose money as an option seller, it is not knowing what to do with the things that you don't know. That's the thing, because trade management, when it comes to trading options, it is 90% of your things. And all the trade managements are done at the entry level before you press the trigger. Once you press the trigger, too late. All your deltas, all the things, you can throw everything through the window. Nothing works anymore, because all those things are calculated if all else being equal. But guess what? Never all else will be equal. So you get what I mean. So all the trade management, it is done at the trade entry, all right? By the way, this is the first thing you need to understand before you press the 1-1-1, okay, the trade, before you press the trigger. And then once you're done, we need to deal with 2 things, okay? With 2 things, we need to deal our debit spread, okay, which is very simple. Very, very simple when it comes to the debit spread. Remember, we are paying here. We are losing money here. Between quotes, we're not losing money because being financed by the naked puts. But you guys get what I mean. Because if you go out of the money, it is losing money. So if it's trading out of the money, the market went up. Okay, what I'll do is, guys, I just leave alone. This will expire worthless because it's already part of the strategy because being financed by the short puts. If it is into the gap, okay, into the trap, whatever you want to call it, which I'm going to explain to you guys in a second what it is. What you're going to do is, if it's trading, let's say, at 80+%, and you have, let's say, 2 to 3 weeks, what I do is, guys, I'll close the trade. I close the trade because I'm already 8% and I still have 2-3 weeks to finish it off. Okay, in 2-3 weeks, a lot of things can happen. This thing can go back to be out of the money. The market can still go up after pullback and get out of the trap because the trap is this, guys. Look at this. Let me see if I can draw here. Remember, this is the payment, okay? We have our value here. We have here. We have here. We have there. This is, okay, this is our premium we're going to collect. This is the maximum we're gonna make, maximum profit. And here we start to lose money, to large money. And like many people say on YouTube, that's not true. Your loss here is capped. That's the good thing. Because this is not a naked code that can go, theoretically speaking, to the moon. The maximum it can go is to the zero. Okay? So your maximum loss is capped by the product going to zero. Simple. It is capped. That's what I'm saying. All your trade management is done before you press the trigger, so you know exactly how much you're going to lose. So if this thing here is trade at 80% and you got 2 to 3 weeks, I close the trade. If it's trading all the way up here, the stock, and this thing here is trading out of the money, I'll just leave as it is because that's my hedge anyway. I mean, like, between quotes, that's not a proper hedge, but extra money, should I say. Okay? So it's very simple, straightforward to approach out of the money and in the money. In the money, 80%, 2-3 weeks, close the thing. In the money, let's say we have, I don't know, a month, 2 months back. Your curve might be only here. You'll be making here only 30% what you should make. I'll just leave it alone. Okay, but if you get close to expiration and the curve here start to pretty much mimic the curve of the profit diagram, I'll just close the trade if you go like 2-3 weeks or maybe 1 week. Okay, very simple. Very simple when it comes to the debit spread. Naked put, okay? Very, very simple, guys. Very, very simple. The same thing again. If I have, let's say, this is a different approach, okay? If we have 95% already gained and we have 2-3 weeks, I'll just close the trade. If I had, let's say, 50%, okay, and the trade only being in the trade for 1 week, I still close the trade. Because if I capture 50% in 1 week and I have, let's say, 120 DTE, which it is for 12 weeks, it can happen. The 30K here can happen very fast if the stock market goes up a lot. I'll just close the trade because what you need to do is you need to close the trade. Let's say you're supposed to gain here, it is $15, okay? Let's say you close for $5 and you gain $10. You need to get this $10 and multiply, okay, for whatever buying power you're supposed to hold this trade. Calculate your rate of return. And from here, you multiply by 365, divide by your days in the trade. And see how much you're getting annualized. Because that's the main thing. You annualized will tell you how much, if it is worth to close that trade at 50%. Because my goal, annualized return, is this, guys. If I get annualized between 30% plus, I'll be happy. Rate of return, my goal is to get roughly 1% per month or something between 12 to 15 per year. You guys get what I mean. I'll be over the moon if I can get this thing here on a consistent base, okay? I'll be very, very, very happy, okay? Anyway, let me see what happened here. We can go back here. Okay, you guys can still see on the screen, okay? So let me see if I can make better here so you guys can see. All right, so here we go. That'll do. All right, great. So carry on here. So it is, guys, very, very simple, okay? Very, very simple. And the naked put, of course, the reason why I'm leaving here at 95%, the reason why is because I am willing to hold this stock, or not the stock, I mean like the futures, the index, or the ETF at 30%, 24%, because our naked put here, this break even here, okay, it is sometimes at 20% plus from the current stock market here, if you guys get what I mean, okay? Because your naked put here that you're selling, it is at 20% already. So from here, it's a great place to get a sign, hold the futures, or hold the index, or hold the ETFs, and then transform that to one of these 4 strategies. That's why I'm getting to this thing to decay a lot and not just closing the trade at 80%, 75, 90%. Of course, I'm talking about here a trade that is trading, let's say, 3 weeks from the expiration date, 2 weeks from expiration date. If we had plenty of weeks left, our approach will be this one here. I'll just close the trade, calculate my annualized rate of return, and I'll move on. If you guys get what I mean, okay? Very, very simple. So debit spread, you have the 2 options, out of the money and in the money. And the naked put, what I'll do is I'll see how many weeks I got left in the trade, how many days to expiration, and I'll calculate my annualized rate of return, and I can close at any profits. I can close at 40%, 30%, 50%, 80%, 90%. If it's been gone up crazy like the stock market and this thing decay already 50% in a week, I'm closing the trade and I move on to another one. But if I'm here like 80% and I got, let's say, only 2 weeks to go, I'll close the trade. But if I see the stock market's pretty much gone up, and if I open the trade at 20%, now it's trading at 30% from the all-time high, I just leave alone, because if we do have a crash 30%, guess what? Thank you very much. I got a sign at 30%. Thank you very much. I'm holding this thing here long term. If you guys get what I'm trying to say, okay? Because who doesn't want to hold, okay, the SPY, SPX at 30% discount, okay? All the way, like here, for example, at 30%. I want to buy the index all day long, all right? So these are the 2 things you guys need to pay attention, okay? Debit spread and naked put. Very, very simple concept to understand when it comes to manage your 1-1-2. Sorry about all the scratch, but I hope you guys can get what I mean. And if you guys don't, let me know. I can put this thing here on a Word document, on a PDF, so you guys can have your methodology when it comes to manage your 1-1-1. But in the simple terms, guys, this is what I'll do myself. Okay, and of course, you can come here, for example. Let me go here to my trading view. Let me see if I have trading view open here. If you go back to trading view, you can come here, for example, and you can do your analysis. Let's say the stock market drop all the way down here. You have your support here. You have 2 weeks to go. Your naked put is already expired, let's say 90%. Guess what? I got a support. If this thing drop here, it'll be like a 30%. I'll just leave it alone. Simple. Because from here, if I get a sign, I can sell another put here, or 2 puts. I can sell a call here, transform that into a covered triangle, or I can leave everything alone. I'm gonna get a sign, I'm gonna sell a covered call here, I transfer this to a covered call, or what I do is I start to do my DCA and I'll buy all the way, or sell put all the way down here. If I get a sign, if the stock market keep dropping, I've got 400 shares or whatever product might be trading at 40% discount price, I'll leave alone and I hold this thing here for the long term. Simple. Become a long-term investing, especially on those products that pay also dividends. You can also do this in stocks as well. There's nothing wrong with that. Of course, for those of you that are beginners, I do not advise that at all whatsoever, because our goal here is something like this. Stock goes down, bearish market, but guess what? The market must recover, because that's the way it is. And if the SPY, SPX, any futures goes to zero, you're going to have way more things to be concerned than your 1-1-2. Okay, but of course, we can still be in a bear market for 2-3 years. But if you don't have the long-term investment in mind, sorry, I don't have, and my channel has nothing to offer to you. Okay, but nevertheless, this is, guys, in a simple term, what I do to manage my 1-1-2. Thank you very much. I hope I have added some value to you guys. Any question, leave in the comments below. Don't forget, subscribe to the channel. We should support our work a lot. Leave your comments and smash the like button, okay? All the best, stay safe, and happy investing.